Omaha. May 2, 2026. 59,000 people packed into an arena, expecting a coronation. What they got instead was something that made grown fund managers sit up in their seats. For the first time in 6 decades, Warren Buffett was not running the meeting. Greg Abel was. And within minutes, something happened on that giant screen that nobody in the room, and nobody watching from Mumbai to Manhattan, was fully prepared for. If you're an Indian investor still trying to figure out whether Nifty is expensive, whether SIPs still make sense at these valuations, or whether the smart money actually knows something you don't, stay with me. Because what Buffett said this year wasn't a victory lap. It was a warning. Let's set the scene properly. 60 years. That's how long Warren Buffett had chaired this meeting. This year, Berkshire opened the ceremony by retiring Buffett's jersey, the number 60, a permanent tribute to 6 decades of service to the company. Think about that for a second. 60. Not a stat. Not a milestone. An entire working lifetime, closed out in front of the people who trusted him with their money. And then, Greg Abel, the new CEO, stood at the podium to run his very first shareholder meeting. This is the man now responsible for a business empire spanning insurance, railroads, energy, and consumer brands. Abel made it clear early on that he isn't trying to copy the Buffett-monger playbook line for line. Instead, he's pushing Berkshire toward what analysts are calling an operator-driven era, focused on execution, efficiency, and disciplined capital allocation. For Indian retail investors used to founder-led narratives, think of how much weight we give to a single promoter's voice. This transition matters. It's a live case study in what happens when a legendary capital allocator hands the wheel to a professional operator. Same principles. Different execution style. But that's not the moment that shocked the room. Here's where it gets strange. Abel opened the Q&A session, and the giant screens lit up with a video. A man in a suit. Familiar voice. Familiar mannerisms. Introducing himself as Warren Buffett, asking Abel directly, why should investors continue holding Berkshire stock for the long term? Except it wasn't Buffett. It was a deep fake, an AI-generated recreation of Warren Buffett himself, used deliberately by the company to open the Q&A session. The real Buffett was sitting right there in the room. And Berkshire chose to let an artificial version of him ask the first question. Let that sink in. The most trusted voice in global investing, a man whose entire brand is built on authenticity, patience, and plain speaking, was represented, even briefly, by a machine. Abel's answer, though, was very real. He pointed straight at the balance sheet. Berkshire is sitting on a cash and treasury pile of $397 billion, and Abel was blunt about why. It gives the company freedom of movement, and Berkshire has no intention of being beholden to anyone. For our Indian audience, imagine a company holding roughly 33 lakh crore rupees in cash and short-term government paper. That's not idle money. That's a war chest. That's optionality when everyone else is forced to sell. This is the lesson Munger used to hammer home again and again. Cash isn't a cost. Cash is a call option on chaos. Now here's the part that should worry you if you're trading FNO on your phone between meetings. Buffett, in a separate interview around the meeting, was asked directly about where markets stand today. His answer wasn't optimistic. He said flatly that the current investing environment is not ideal, and that he sees signs of outright gambling behavior across markets. Gambling. Not speculation. Not elevated valuations. Gambling. This is a man who has watched every market cycle since the 1950s use that word. And he used it in the same year that short-dated options volume and prediction market betting have exploded to record levels, both in the US and increasingly on Indian platforms through weekly index options. Ahead of the meeting, Wall Street had been speculating heavily about whether Berkshire, sitting on that enormous cash pile, would finally get aggressive, bigger acquisitions, larger buybacks, maybe even a real allocation into AI and technology stocks. And what did Buffett and Abel actually deliver? Restraint. Discipline. No chase. If you've been watching this channel, you know this is the pattern we keep coming back to. When the casino gets loud, the church stays quiet. Berkshire didn't join the AI stampede. It didn't torch its cash pile on momentum. It sat still, on purpose, while the market called that boring. That boring decision is exactly why Berkshire still exists 60 years later, and most momentum funds from any given decade don't. Let's bring this home to Dalal Street. Right now, Nifty and Sensex are trading at valuations that plenty of experienced analysts consider stretched. Retail F&O volumes in India have made headlines for years. SEBI itself has repeatedly flagged how much money retail traders lose in options speculation. Buffett's gambling comment isn't really about America. It's a mirror. Ask yourself honestly, is your last 5 trades built on business fundamentals, or on momentum, tips, and the fear of missing the next 20% move? Here's the uncomfortable truth Buffett has taught for 60 years. The market doesn't reward activity. It rewards patience combined with judgment. Berkshire's $397 billion cash pile isn't fear. It's discipline waiting for a fat pitch. For your own portfolio, whether it's a SIP in an index fund or a basket of quality stocks, the lesson from Omaha 2026 isn't do nothing. It's don't confuse motion with progress. Sitting on cash when nothing meets your price is not weakness. It's strategy. One more thing before we close. Even with an AI Buffett opening the show, the real Buffett wasn't silent. He took the stage himself during the meeting for 2 lengthy, unscripted moments, reminding everyone in that arena that wisdom doesn't retire just because a title changes hands. And actor Bill Murray, a longtime attendee, was there too, laughing through it all like he always does, a reminder that even the most serious investing event on earth still has room for a little humanity. That's the real bombshell, if you asked me. Not the deepfake. Not the cash pile number. It's this, the discipline that built Berkshire doesn't live in one man. It's a culture now. And whether that culture survives the transition from Buffett to Abel, that's the story we'll all be watching over the next few years. If this breakdown gave you a clearer lens on where markets stand in 2026, hit subscribe. Master Investor Mindsetter breaks down Buffett and Munger's biggest moments through an Indian investor's lens every single week. Drop a comment. Are you holding cash right now like Berkshire, or are you fully deployed? I read every one. See you in the next one.